Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, March 17th, 2014. And this is brought to you by Triton Wave Consulting, home of the Triton Waves. The Triton Waves are early warning, market timing indicators used in all time frames and all markets worldwide. All right, first I want to look at the headlines. Before I start, I want to tell you that you're not missing anything. I have not done a video since February 10th. I've been doing a lot of going over the waves and tweaking them a little bit, so I've been studying and researching during that time. But I wanted to start off with the headlines. Crimeans vote over 90% to quit Ukraine for Russia. Now, whether that's real or fabricated exit polls stuff, you never know, but it gives Russia an excuse to maintain their troops in Crimea, which is basically bringing more international tension between the East and between Russia and the West, and Merkel in Germany, who holds the power strings of the economy there, and the transmission of gas lines and everything that's geopolitical and monetary is happening. So we're in a real tense situation, and as a result, that's why the market went down on Wednesday, Thursday, and Friday, but we'll look into that in a minute. Right now, I'm looking at the ES that is down 300. You see the cursor right down there. It started off plus 25 when the news broke, plus 25, plus 50, and then down. It kind of weaseled around for a while, and then it's starting to take off. But this is what I wanted to show you. Primarily stuff that I've been talking about for months now, or for weeks. This is a weekly chart of the S&P. This is a continuous chart. Let me get a drawing pen up there. And this is the peak of 1587 right here that happened on April, I think that was around April 2007, and the trough right in here, March of 2009, and we've been straight up ever since. Okay, this area that I've been talking about for about 5 or 6 videos is my line in the sand right here. This was the 1272 extension of this move here. Also, if you look carefully, if you want to bother counting these, and I got this actually off of another site that I look at. This lady's name, she's called the Fib Queen, Carolyn Boroden. She pointed out, which I hadn't actually looked at, from trough to peak right here is 60 weeks, and this is 60 weeks. And you have the 1272 extension, and you have everything going on. You have China moving slowly in their in their economy, not as robust as it used to be. And that's another thing with what's going on in Russia, is that Russia doesn't want to create too many waves, because right now Russia depends on Europe for their income. So they don't want to screw it too much political economic stuff there. Europe can get by without Russia. Russia cannot get by without Europe. Also, additionally, the balance of trades in China is negative for the first time in a very long time. Their trade deficit is negative, which sounds like an impossibility, because if you look at all the Walmarts in this country, looks like 90% of the stuff that they have is made in China. Okay, let's move on. Okay, so let's look at February 10th, where we were. Where were we the last time I did this? Okay, we were right here, February 10th. It was on the upswing, even though the waves were we're pointing down, it doesn't mean that this can't go on. So we have to look at smaller time frames if you actually want to be a trader. But if you're a long-term investor, you can start nibbling at it here and just nibble, nibble, nibble. We're talking longer term, because we all know that it only takes 1 or 2 days to wipe out 3 or 4 or 5 weeks worth of gains, and the only gains that have been going on are the high flyers. So now we're looking at this purple line right here is 18. Actually, let me see what it is. This purple line is the 1272 that we got from the weekly. Let me just see if I have a number on it. 1837, and we finished the week at 1833, and right now we're at 1830, and it's been down 1.25 more. So this is what I'm looking for. We get all these lines up here. If this continues to break this line, which is actually, it's been about 2 weeks doing 2 or 3 weeks along this 1272 line, and then it collapsed. I actually thought this collapse was going to be real when it started breaking down here, but then they got momentum. I think it had to do with Russia saying that it wasn't going to be in Ukraine anymore, but that turned out to be a lie, because not only did they say they weren't going to be there, but they increased the troops along the Ukrainian-Russo border. So that jackknifed the market up a little bit more and just basically delayed the inevitable, because this is what I'm looking at with the waves, and I'll show you right here. In terms of trading, one of the things that I look at is when you have a higher high, like we do right here, but the waves are trading at a lower high. Okay, one of the classic signs of a top, and I'm not just saying a temporary top, I'm saying that this may be the top. I'm not saying that it is, but there's a very high likelihood that it is. That when this goes down below zero, comes back up, and these 3 days that it was above zero, with a very small move above zero on the wave, but a significant enough move that it's more than perceptual. It's from here, which was like 1845 to 1885, I think it went to. And then it drops below zero, which it is now. These are both, T1 is now completely below zero for both these waves. Oh, by the way, these are newer waves that I'm looking at that I've been playing with since the last video. Okay, correction, these are not the new waves, these are the older waves. Okay, so on the S&P, now that we have broken below this line right here. Okay, first of all, the 21 and the 55 crossed just as we just on the move, on this first move down. I think that was on last week. And now we are not only below this 1272, but we are below this minor wave on the 144, which is similar to a 2-hour round-the-clock chart. All right, so at the very least, we do a 50% retracement, and just eyeballing it, we're right in about here. There's a 50% retracement of from this move to this move, and that puts us right about at 1800. More than likely, whether this comes down very hard or gradually, like a disbelieving gradually. So it just kind of chops down here, or it just happens in like 2 days. This is what I'm looking at. I'm looking at 1761, and right now we are currently at 1828. So we're talking about 28, 32, 40, 50, 60, 70, 70 points. This is a real possibility, mainly because T1, T2, T3 are below zero, and here's the main one. Even though T4 is kind of skimping along the bottom there, you can see it's like right in there for the short wave, right in there. This, and I'm going to blow this up for you so you can see it very plainly. This long wave, which is like my master wave, is below zero for the last 4 hash marks on 144-minute chart. So that takes us back to Friday morning. All right. So shorter term, let's look at the 55s. All right, so 1822 almost looks like a foregone conclusion. Let's look at the 21s. 21, you really can't get a good perspective from this. But let's go back to the daily, see what we find here. Okay, let me see here. Ba-ding. All right, so longer term, this could still be an uptrending market if we come down to 1653. Now I know it's, 170 points from here on the S&P, and it may just like zigzag down there, but I just want you to know that it's a real possibility, like what happened back in 811, what happened back in 512, what happened back here in 1012, and what happened back here. It's a little bit more than that, but these are all very real possibilities, especially given the geopolitical climate. Okay, as far as the 144 24-hour chart, I've moved this to a to the newer waves because they show a little bit more. Okay, so you can see the breakdowns that these happened. That happened when this went below zero, here and here. So here we had a move down and then a snapback move up just to the same area that was resistance, and then when the green wave, I haven't really named these, but for right now we'll just call them T1, 2, 3, and 4. So wave 2 right here went down below zero just before this cracked, and this was good for, I don't know, so it's 1840 back down to 1740. This is like good for 100 points on the S&P. This was the January move, and I'm sure you all remember that. And it went through the minor wave, and it went through this next wave right here, bounced off of this several times, and then it bounced off the major wave. So that's why I like the major and the minor waves. So even if you took your profits here and did not play a bounce until this happened, which was right about here, you would have gotten a nice chunk of this that only ended right here just before the next crack. Okay, so here's the rule of thumb. When you make a move, when I take a move on the 144.00 chart or 24-hour chart, the next thing I look for, and I'm going to mark this with a line so you see it on the next chart. So this is the line right here when it goes down here. I'm going to mark this as a line here, and this is the line where T1 goes above 0. So let's look at a smaller time frame chart, and we'll see if we can narrow this down a little bit. So use this for use the larger time slot to get in and the smaller time slot to get out. So we'll move this to a 55. And you can see instead of waiting to get, you can get in because it's safer to get in on a longer term one. But if you're a day trader, you can get out like right in here, which is like right here. You can get in, you can get out, you can get in. And then you follow that up, and if it clicks on the 144, the 144 will carry you the rest of the way. That might seem confusing, but maybe some other examples may help. Okay, just as a review, we are down 625 right now. I would not be surprised to wake up in the morning and we're down 20 points. That wouldn't surprise me at all. All right, as far as tick charts go on these neural waves, you can play them really nicely. Here's bing, bing, bing. Okay, so here's a chunk. That's that chunk. That's down. Play this up. I love these neural waves. You're not going to get the exact top unless you play the wave above it, and then you wait for the next wave to come down, which is right about in here. Then you confirm it with the next one, which is about here. You confirm it with the next one, and if you want to walk away and look at it, not look at it, then you just walk away until when you're confirming with wave number 4 here, then you're waiting for something on the order for this to come up, and this actually went sideways for a while and went down again just before the close on Friday. Now, if you go to really smaller frame charts and you're really fanatic about trading all these and you just want something to do, you can actually play the 144 on these. Let's see if it doesn't take too much time to load here. You're only going for like 3 or 4 points at a time. But that's day trading. That's like hourly trading, like from here to here, from here to here. This one you'd about break even, maybe a little bit. Yeah, just about break even on that one. But it didn't really go anywhere. This one you made like 4 or 5 points. This one is about break even. So it's really easier just to take a bigger view, like even the 21 starts back here on February 9th. And that's at 1873 and already down to 1826. All right, let's look at some stocks. All right, let's take a look at Goldman Sachs really quickly. Up, you can see down below 0, and then cover, and then this one of the ways is below 0, just nipped it. So if it starts nipping it and it's fooling you, then you go to the next one that just keeps you in all the way to here. Also, let me see here. This is actually, this would be the wave. You're watching the wave that is currently moving with the price. So this keeps you in all the way, and actually you're still in the straight. Now the only caution is that T1 is below 0 and T2 is below 0. So you might look for from short blips. This may be good for a 13 point move, but there are better things out there on the short side. But let's look at if the 21 gives you any more hint here. Okay, the 21 on Goldman is going above 0 right here and moving below 0 right here. So it's about well, it's only like a 7-point move. It's really not worth the aggravation. You can, if you want to day trade this, which would be even better, you just use the 5-minute one. And that would show you on the 5-minute chart. This is just 5-minute cash time. The big moves are really right here that took it way up. And then the same orange line right here took it down, and it's still down. All right, let's look at Amazon. Let's look at Amazon Daily. Amazon Daily actually is hard to tell about this. Everything is up except the first wave, and actually let's do a retracement on this from the top. This is right. This did a reversal right at the 618, and additionally this is down below 0 on T1. So let's look at this on a 55-minute chart to see if we can see anything better. Let's get rid of that. This actually doesn't. That looks better on a 55-minute chart. Let's look at a 21 to see if we can get in there. All right, so I wouldn't touch Amazon on the downside. So that's not going to go. That's going to do whatever it's going to do. If it goes down, then it's counter to its own trend. So let's look at everybody's favorite Apple. Okay, this is the daily on Apple. Let's look at this really quickly. All right, now the 21 went below the 55 on the daily on Apple, and even though Apple went up another 20 points, it did not change the 21 and the 55 perspective. And even though it went up here, this just brought everything closer to 0 of crossing over. And T2, I'm sorry, wave number 4 is down, wave number 3 is down, and this looks like it's trending down here. So let's look at smaller time frames here. The 55-minute is about to go down. Here's the okay, this has already been down here since about February 3rd. So you had this little blip up, major down, recovery, fill the gap, then down again, 50% retracement, then up again, 50% retracement, and if this cracks 518, it's going all the way down to 500, and that's what I'm looking for to happen with Apple. I'm looking for it to crack, mainly on the strength of the 21, because this broke through on the 21-minute chart, this broke through the major and the minor wave, and came down strong on Friday, and just couldn't get back going again. But mainly, this is below 0 completely. This is below 0 completely. This is working its way down, and this is only 1.38, which is somewhere right in there. So this is the longer wave if it goes below 0. Apple is toast to the downside. At least 500 and maybe more. Maybe down testing at least 516. If it breaks that, then it's going to test its old lows. Okay, let's take a look at gold. Actually, most of the stuff I have on gold is on 24 hours, so look at that. Gold looks, let's look at the daily. Alright. That is an absolutely fantastic looking chart. The gold is already up $12 right now, $391. And that is on a daily chart. Let's look at a weekly chart on gold. Maybe we can see something better. The weekly chart, since it broke out from everything here, the weekly chart looks like gold is good for 1424. Now, if you want to trade it daily, that's a different thing because it does a whole bunch of things on a daily chart, and the fib numbers work out really well with that. But let's go back to daily, and it's up $11-12 right now as the S&P is down 650. And look at this nice breakout. Okay, this is kind of like a breakout. This, not the white line, but the white line is a warning. The white wave is a warning. Back around 1268, and then it moves down here. Back below the major wave, and then back above. As soon as it moved back above it, and as soon as the 21 moved past the 55, and as soon as wave number 2 here moved above 0, bing, at 1272, this was a goner to the upside, and this is why I did not short it back in here, because I was looking at these go above 0. So 1275, 1272, and we should, well, it's kind of a foregone conclusion it's going to hit 1400. But on the weekly, it looks like it could hit whatever number I gave you, 1424. All right, if we're playing this, okay, this is what I actually, this is the kind of stuff I offer on my service, because you can play with this. You don't just have to sit and watch it for, you know, like walk away and watch it. If you are actually a participating trader who cannot get your hands off of a trade because you just love to trade, then you will love these new waves, the old ones and the new ones. Okay, check it out. Here, above 0, right here, bing, you got this move here. You can either short this or stay out of it, depending on which way you're going. Came down, crossed back above, and this happened at 11 o'clock Friday afternoon, and it's been going straight up since. It's confirmed by wave number 2, wave number 3, and now wave number 4. This thing, you know, I wouldn't chase it right here if you're not already in it. But if you want to get in it, then I would wait for this to come back. For right now, let me see, it's 1388, it was 1392. Just let it breathe a little bit. Let it come down to like 1383, 1380. It may or may not, but that's a non-chasing way to get in it. So, covered gold. These shorter term waves are available to my clients. Well, they're not available, but this is what I give signals off of, stuff like this. On a 377 wave, it's not as accurate. You have to check out the wave, but you can see it bounces off the minor wave, bounces off the minor wave, bounces off the minor wave. So you can't get pinpoint accuracy as much. The larger the tick is. Let's go to a 612. Nope. And let's go to a 987. Much harder. So the one to read here is the 144. Could change during the daytime where we use a longer tick chart, but right now it's kind of slow in the evening, so it's easier to use the slower charts. So that's all I have. Have a great St. Patty's Day tomorrow or this weekend. Enjoy the rest of the weekend, and I will see you at the next update. I did want to conclude with this. I'm going to leave this up for a while. This is a trading service that I have for experienced gold traders only. People who know when to get out, who know how to set parameters for profit stop losses and trailing stops, and know how to make a profit on a good run. This offer is exclusively for experienced gold traders. And if you want to get in touch with me, these are the monthly fees. I'll leave it up there for you to look at, or you can pause it and look at it. Oops, let me get back here. You can get in touch with me at I am Rodney Julian. Get in touch with me at tritonwaveguy@gmail.com. Have a great weekend, and I will see you at the next update.